Pharma. Let's shift focus now to the commodity space with rising crude prices amidst the Russia-Ukraine war. Earlier, Manisha Gupta spoke with Prashant Vasisht, the Vice President and co-head of corporate ratings at ICRA. She began by asking him on the recent price hikes by oil marketing companies and how many more he expects going forward. Listen in.
The OMCs have chosen to increase prices in small increments, so there would be some prolonged losses for OMCs. But we believe that over the course of April and sometime during May, the prices should reset to the market levels. Currently, if we look at the prices, the OMCs seem to be losing about 10 to 12 rupees per litre on auto fuels. But if we factor in the higher prices, say at about $115, the price hike could be as much as about 18 rupees to the per litre for the auto fuels.
Also, Prashant, how would you look at the ban that we've seen on Russia from various countries and the kind of impact that perhaps India could be looking from it? As of now, we do understand that India is negotiating for a discounted Russian oil import. How do you see that impact and effect?
See, the Russian crude is energy supplies are still being consumed by the European countries, and the partners in the NATO have also not been able to completely wean themselves off. It is more of a kind of a ban by many traders and refiners where they have chosen not to procure oil from Russia or for that matter. But looking at India, India is getting some discounts, but on a delivered basis, there is not much difference. There's only a marginal, Russian crude is only marginally cheaper than crude from other sources because the delivered costs, including shipping and insurance, are higher.
So, Prashant, how much does India import from Russia, and is that getting impacted at all? And do you think the long-term contracts will continue to hold?
No. See, the dependence of Indian companies on Russia as it is was quite low. I don't see that being completely reduced to zero or so that ban should not, it should not be reduced to zero, I think. And India will continue to procure crude from Russia.
The kind of scenario that we are in right now when it comes to crude, whether it's globally or the kind of impact that we'll see in the Indian markets where we import 85% of requirement, how are you reading this situation?
Russia is too big a producer to completely be shut out of the market. Where do you get those barrels from? Iran is a much smaller producer. Venezuela's oil industry has been declining and has not had is in doldrums because of lack of repairs and maintenance and increases in production. So I don't see a scenario happening very soon where Russian crude and petroleum exports are go out of the picture.
What kind of margins are we looking at for the Indian companies? And as you said, there are losses, yes, and they could be brought even by April, May, perhaps. We are talking about higher working capital, perhaps. We're looking at good move coming in for the upstream companies, not so much for OMCs. How are you reading the situation for various oil players within the Indian market?
For the oil marketing companies, the losses on the fuels will be compensated by much higher GRMs. We have very robust GRMs, very robust cracks for diesel and ATF currently. And there is massive, requirement of diesel in Europe and even in the US. These stocks are much lower than historical levels. So the losses on the marketing side will be compensated by higher GRMs and the inventory gains that they would be making in because of higher crude oil prices. That is one. On the upstream side, we see the upstream companies benefiting from the higher realizations on crude and natural gas. So that it would be a positive for them.
Okay, well, on that note, we will wrap up with halftime report, but don't go anywhere. Business Lunch will take all the action ahead.